Good morning. You are watching a live daily market outlook for Friday, 2nd of March 2012. End of the week that was significant for the sharp fall of a number of majors as Bernanke came 2 days ago with the speech saying that most likely further quantitative easing is not in the pipeline for the US as the economy is showing a stable path, as well as ECB's tender that pumped in the market 530 billion euros to the cash-starving 800 banks. The euro remains at the back foot this morning after a rather quiet overnight session, as well as sterling holding positive but still under pressure of recent highs at close to 160 level. Dollar remains strong across the board against Japanese yen, holding off the recent highs at 81.65 after finding ground at 80.00, and dollar Swiss also in the stronger recovery mode, currently denting initial strong barrier at 90.80, 91.00. Crude oil is back to strength, mainly on reduced fears of possible disruption in the supply as world officials, the Saudi officials said that Saudi can actually already extended the production of the oil in order to cover up the recent shortage due to the sanctions to Iran. Gold holds steady in the short-term narrow range trading after hitting lows below 1700 and currently holding above 1700 hour support. Today is also the second day of the EU officials meeting. They're still arguing between the further possible growth of the Eurozone economy, as so far showed quite negative signals, as yesterday's manufacturing PMI again came below 50 and holding below 50, which is the borderline between growth and contraction, as well as current situation with Greece and the possible spreading of the crisis towards the other countries that are in debt, such as Italy and Spain. The European Union leaders argued yesterday over the right balance between budget austerity and the reviving lost growth at the first summit for 2 years, in which Eurozone debt crisis did not eclipse all else. After their finance ministers gave provisional approval to a second bailout for Greece and the flood of cheap European Central Bank funds calmed the bond markets, the 27 leaders used the breathing space to focus on structural economic reforms and other ways to combat record unemployment. This was also yesterday's release that showed unexpected jump in the unemployment to 10.7% compared to 10.4 forecast and the 10.6 previous month release, along with the manufacturing PMI that I already mentioned. The also European officials agreed to give Serbia candidate status for the EU membership and reappointed former Belgian Prime Minister for a second 2.5-year term as President of European Council, adding the role of chairing a new twice-yearly summit of the 17 members Eurozone. Leaders of 25 of the 27 countries will sign a German-driven fiscal compact treaty today to enforce the EU deficit cutting and debt reduction rules more strictly. But without a return to growth, several European countries risk entering the same spiral of depression as Greece. The British Prime Minister David Cameron told the reporters that Europe faced a growth crisis as well as a debt crisis. Diplomats said Cameron won support from Italy's Mario Monti and the Dutch Prime Minister Mark Rutte when he complained that a draft summit statement paid insufficient attention to a call by 12 EU leaders for more market deregulation to unleash economic dynamism. But European Commission Jose Manuel Barroso said the real problem lay with the country's failure to implement agreed reforms. Diplomats also commented the dispute between Britain, France and Germany that is holding up a long-delayed agreement on a single European patent that would cut business innovation costs. From Germany, Chancellor Angela Merkel, the driving force behind the strict austerity policies, said the ECB massive cash injection to banks had bought Europe's politicians precious time to work on improving competitiveness, growth and employment. From today's calendar that kicked with Japan's economic indicators showing that Tokyo's core CPI yearly release dropped by 0.3% compared to minus 0.3% compared to minus 0.4% forecast. National core CPI in Japan is minus 0.1% compared to the forecast of minus 0.2%. Unemployment in Japan rose to 4.6%. Actually stayed unchanged from the previous release at 4.6% compared to 4.5% today's forecast. Surprising release from Germany. Retail sales monthly released already at 7 o'clock GMT showed surprising fall by minus 1.6% compared to 0.5% increase forecasted and 0.1% of the previous month. From coming economic indicators for today, we have the UK's construction PMI due at 9:30 GMT, forecast slightly below the previous release at 151.4. With previous release 51.4 is the previous release, I apologize, and 51.3 is today's forecast. At 10 o'clock GMT, Eurozone monthly PPI expected to come at 0.6% compared to minus 0.2% of the previous month release. And from Canada, the last one, monthly GDP positive outlook for today, 0.3% expansion is seen for today compared to minus 0.1% of the previous month release. We're going to take a look now on the markets and see the latest movements with the majors and the commodities. Starting with euro, short-term outlook still shows the pair under pressure as initial recovery attempt of yesterday's low at 132.81 was quite mild, and the upside being capped by 20 days moving average that currently maintains the recent fall after break at 134.45 and still capping the upside. A fresh weakness this morning, broke below 132.81, hit so far 132.64, signaling further extension lower as hourly studies remain in the negative territory and pointing lower. Wider picture shows us this was actually break of 38.2% Fibonacci retracement of the broader move from 129.73 up to 134.85 as the pair created a double top on the 4-hour chart. Further extension lower now is seen towards 132.29, which is 50% reversal of the move, and the more significant 132 zone, which is the floor of the congestion of 21st, 22nd of February, and seen as our next target. On the upside, immediate resistance now lies at the previous support at 132.81. Above this, we have 133 and 133.30 ahead of 133.55 and 133.65 previous break point that is for now expected to limit recovery attempts along with the 55 days exponential moving average currently at 133.41. Cable is in recovery mode, but overall picture remains firmly bullish as pullback of the recent fresh high at 159.91 held above 159.00, where is also 200 days moving average that was broken a few days ago, as 55 days exponential moving average holds so far the downside. It's important to keep above 159 and to keep above 200 days moving average in order to resume higher. The picture still shows the hourly structure still positive tone. However, hourly studies are weakening at this point, and this might signal further reversal. 159 is our next strong support, and holding above here, as mentioned, keeps the positive outlook for a fresh extension of the broader up leg, latest bull leg from 158.00 higher base. Would break above 159.91 and 160.00 is around the figure resistance to open levels at 160.90, 14th of November 2011 high, and 161.00, 161 Fibonacci extension. These are our upside targets. On the downside, the risk is seen on the loss of 159.00. That might trigger a stronger recovery. However, only loss of 158 higher platform would harm the current positive structure, but in any case, below 159.00 would signal a return to the longer term range that lasts from the beginning of February 2012, despite being broken. Holding above 159 keeps the bulls in play and looks for test of previously mentioned upside targets. Dollar yen is regaining strength as the reversal of 81.65 found the ground at 80.00. That was a strong support, round figure support also, with the current rally initially reaching 81.39 and subsequent mild correction finding support at levels around 81.00, 80.80 as the 20 days moving average held the reversal. Fresh strength that emerged overnight and in early European hours regained the previous high at 81.65. 81.70 was tested 61.8 Fibonacci retracement of the broader down move from 85.51 high of 2011 down to 75.76 record low of dollar yen, with clearance of these levels to open way for test of our next targets at 82.00 and 82.20. Supports at 81.00 is the main support ahead of before this dynamic 81.31 20 days exponential moving average, and also dynamic support at 81.00 along with the static ones is 50 days exponential moving average, and holding above this level keeps the immediate bullish structure in play. Hourly studies are still positive, yet no firm signal of reversal as the studies hold their levels above the center lines, seeing potential for further extension higher. On the wider picture, only loss of 80.00 higher platform would likely open way for a more significant reversal and keep the upside out of play for now. The dollar Swiss is in the near-term recovery mode of double bottom at 89.30 zone, as the pair cleared initially 90.00, our initial target, and fresh gains now attempting to the next stronger resistance zone at 90.80, 91.00, above which is just above this is 50% retracement of the entire move from 93.00 down to 89.30. And then more significant static barriers at 91.50, where is also 61.8% retracement. Our key barriers on the short term are at 92.50 previous range highs and 93.00, clearance of which is to signal to confirm the bottom at 89.90 and refocus higher levels and prevent actually the possible further extension of the downtrend of 95.73. On the daily, 91.00 is also a 20 days moving average on the daily chart, and this is our among the static resistances, this is another barrier that the pair needs to clear. As mentioned, the near-term studies are positive, and keeping a focus on the upside. We might see some corrective action as RSI is again in the overbought zone, but as long as it holds above 90.20, 90.00, immediate focus, immediate bulls will continue to focus higher. A brief look at gold. It's in recovery mode after a sharp fall that dipped below our strong support at 1700 zone. Low of 1686 was seen so far. Recovery attempt so far capped at 1725 zone, where the pair gets congested, and possibility of further extension lower is not ruled out, although the studies are negative but overstretched. This might signal some further recovery. On the upside, the 20 days moving average 1736 offers initial resistance. It's important that the pair regain the 1700, 1705, and if holding above this level might keep upside focus still in play, but clearance of 20 days moving average at 1736 and the previous range high at the same level would signal some stronger recovery. 1750 and 1763 are the next levels ahead of our key barriers at 1787, 1790. Daily structure for gold is still in a way positive, although the weak momentum that is breaking below the midline sees potential of further weakness as the MACD is approaching midline and holding below its signal line, and this might signal some further extension lower. Also at 1738 is, as mentioned, the 20 days moving average. We need to see clear break above this zone in order to improve. On the downside, low at 1686, also marking a 38.2% Fibonacci retracement of the broader uptrend from 1522 to 1790 is the next strong support, and the loss of it would risk test of 200 days moving average at 1673, below which would significantly weaken the structure, short-term structure of the yellow metal. Crude oil is back to strength after initial reversal of 109.92 high of 24th of February, with the low seen at 104.83. A steady recovery from there resulted in yesterday's spike higher that cleared 109.90 and 110.00 as our psychological barrier, hitting 110.53 in the late hours of the US session. Positive hourly studies still in the positive territory, keeping the focus higher. Corrective reversal currently underway. A break of 20 days moving average now sees the next support at 107.80, 55 days moving average. A break below the recent congestion floor at 107.41 along with the 55 days moving average would significantly weaken the current structure and possibly open a way for a further extension lower. On the downside, the loss of 106.54 current range floor would signal further reversal. However, reversal above 107.50 would be ideal to resume the current recovery of 104.83 and possibly refocus recent highs at 110 and 110.53. Have a nice day.